Hello everyone, I am Zara Fatima. Welcome back to my channel. Today in this video I am going to explain you the subject cost control and management accounting. The subject cost control and management accounting is for the students of BCom third year semester 6 students. And in this subject I started one chapter, that is marginal costing. In my previous videos, I explained you the theoretical part of the subtopic marginal costing and formulas of marginal costing also. And in my last video, I explained you 4 important problems also. Now, in this video, again I am explaining you 4 more important questions from your examination point of view. Now, let's see what are the questions. And before explaining the questions, once again I am repeating you the chapter marginal costing is completely based on formulas. So until and unless you have the command on the formulas, you will not be able to do the problems easily. So for doing the problems easily, you must have the command on formulas. Now see problems of marginal costing. And whatever questions I am explaining, that questions are very important from your examination point of view. Now, the question is, you are given the following data for the year 1978 of X company. Under that information, variable cost 6 lakhs, that is 60%, and a fixed cost 3 lakh, that is 30%, and a net profit 1 lakh, 10%. And total is given 10 lakh, that represents 100%. And asking you to find out break-even point, PV ratio and margin of safety. So the given information is variable cost, fixed cost and profit. If you add variable cost, fixed cost and profit, then you will get sales. So here total 10 lakh is given. So this 10 lakh is nothing but sales, which represents 100%. So no need to consider the percentages because that is not useful for us. Now, he is asking you to find out break-even point, PV ratio and margin of safety. For break-even point in rupees, the formula is fixed cost into sales by sales minus variable cost. And in the question, information is given variable cost, fixed cost, profit and sales also. So all the information is given, only we have to substitute in the formula. So fixed cost is 3 lakh, sales is 10 lakhs, this 10 lakh represents sales. And variable cost is 6 lakhs. So fixed cost 3 lakh, sales into 10 lakhs. Then 10 lakh minus 6 lakhs. 3 lakh into 10 lakh minus 6 lakhs, remaining is 4 lakh. So answer is 7 lakh 50,000. This is your break-even point in rupees. Fixed cost into sales by sales minus variable cost. Now, next question is asking you to find out the PV ratio also. For PV ratio, the formula is contribution by sales into 100. And contribution is nothing but sales minus variable cost, or you can find contribution fixed cost plus profit also. So here sales is given, variable cost is given, fixed cost is also there, profit is also there. So you can find the contribution by applying sales minus variable cost, or you can find the contribution by adding fixed cost plus profit. So here contribution sales minus variable cost. Sales is 10 lakh, variable cost is 6 lakh. So 10 lakh minus 6 lakh, 4 lakh is the contribution. And a PV ratio, contribution by sales into 100. So 4 lakh is our contribution, 10 lakh is the sales. 4 lakh by 10 lakh into 100, we will get 40%. 40% is our PV ratio. Now next question is asking you to find the margin of safety. For calculating margin of safety, the formula is profit by PV ratio. Just now we find the PV ratio and profit is given in the question. So profit by PV ratio, we will get margin of safety. But in the question is asking you to find out the margin of safety ratio also. So for margin of safety ratio, formula is margin of safety by sales into 100. Margin of safety, just now we find 2,50,000. So 2,50,000 by 10 lakh sales into 100, we get 25% margin of safety ratio. So this is your first question. Now the second question is the following information related to Kakatiya Cement Limited. Under that information is given: sales 10,000 tons, rupees 5 lakh. Cost, under cost, material, labor, direct expenses. Material is 1 lakh, labor is 50,000, direct expenses is 60,000. Total is 1,60,000, and the fixed cost is 3 lakh. Profit is 40,000. In my last video, I explained you what are the components of marginal variable cost. The components of variable cost is material, labor and direct expenses. So here cost is given: material, labor, direct expenses. So this is your variable cost: material, labor, direct expenses. Total of these three, 1,60,000. This is our variable cost. Now, in the question is asking you to find out break-even point, PV ratio, margin of safety, sales required to earn a profit of 50,000. This is the desired profit, and profit at a sale level of 9 lakh. So in the question, sales is given, variable cost is given, fixed cost is also given, profit is also given. So all the information is there. Simply we have to substitute in the formulas. Now, first is asking you to find out the break-even point. But before finding the break-even point, we have to make a income statement. Okay. So under income statement, first sales. Sales represent S, that is 5 lakh. Then less variable cost. Here variable cost is material, labor and direct expenses. So material 1 lakh, labor 50,000, direct expenses 10,000. Total is 1,60,000. This is the total variable cost. So sales minus variable cost, we get the contribution, because formula of contribution is sales minus variable cost. So S minus V, we get the contribution. From the contribution, if we subtract the fixed cost, we will get the profit. Fixed cost is also given 3 lakh. So 3 lakh fixed cost, contribution minus fixed cost, remaining 40,000 is the profit. Now break even point. Break even point in rupees. Formula is fixed cost into sales by sales minus variable cost. We have fixed cost 3 lakh. We have sales 5 lakh. Variable cost 1,60,000. So 3 lakh into 5 lakh. 5 lakh minus 1,60,000. We get 4,41,176. This is our break even sales. Now next point, PV ratio. For calculating PV ratio, the formula is contribution by sales into 100. Now for contribution, just now we find contribution by making the income statement. So contribution is 3,40,000. So 3,40,000 by 5 lakh into 100, we get 68%. This is our PV ratio. Now third point, margin of safety. For margin of safety, formula is profit by PV ratio. Profit is 40,000. Just now we find the PV ratio, that is 68%. Profit by PV ratio, we get margin of safety, that is 58,824. Now next bit is asking you to calculate sales required to earn a profit of 50,000. This 50,000 is called desired profit. So for sales required to earn a desired profit, we have a formula, that is fixed cost plus desired profit divided by sales minus variable cost whole into sales. So this is the formula. Fixed cost, this is 3 lakh. Fixed cost, desired profit is given the question 50,000. 3 lakh plus 50,000 divided by sales is 5 lakh minus variable cost 1,60,000 whole into sales, we get 5,14,706. This is your sales required to earn a desired profit of rupees 50,000. Now, the last bit he is asking you to find the profit at a sale level of 9 lakh. So, whenever in the question is given find the variable cost, find the fixed cost, find the profit, in that case we have to apply the marginal equation. And our marginal equation is S is equal to V plus F plus P. In the question he is asking you to find the profit. For finding the profit at a sale level of 9 lakh, we need variable cost and we need fixed cost. In my previous videos, I explained you what is fixed cost and what is variable cost. Fixed cost, the cost which remains constant. The cost which is not changed, that is called fixed cost. And variable cost, the cost which is fluctuating in nature, which varies if the production is increased, and variable cost is decreased if the production is decreased. Now here sales is 9 lakh and sales which is given in the question is 5 lakh. For a sale of 5 lakh, the variable cost is 1,60,000. Now we have to find out for a sale of 9 lakh how much will be the fixed variable cost. So here in the working notes, for the given sale 5 lakh, variable cost is 1,60,000. For a sale of 9 lakh, variable cost how much? So for a sale of 9 lakh, variable cost is 2,88,000. Now we can substitute in the equation. Sales is 9 lakh, variable cost just now we find out 2,88,000, and fixed cost is the same fixed cost which is given in the question, because fixed cost will not be changed if there is change in the sales. So fixed cost is 3 lakh. So 9 lakh minus 2,88,000 minus 3 lakh, we get the profit 3,12,000. So this is our profit for a sale level of 9 lakh. Now one more question is there, and this is also very important from your examination point of view. Maybe in short questions he will ask you, find PV ratio and margin of safety when sales, variable cost and fixed costs are 10 lakh, 4 lakh and 4 lakh. So in the question, sales is given 10 lakh and the fixed cost is given 4 lakh, variable cost is given 4 lakh. So first we prepare the income statement. Sales is 10 lakh, variable cost is 4 lakh. So from sales we subtract the variable cost. Sales minus variable cost, we get the contribution. And from the contribution we subtract the fixed cost, we get the profit. Now he is asking you to find out the PV ratio and margin of safety. For PV ratio, formula is contribution by sales into 100. Now contribution 6 lakhs, sales is 10 lakh into 100. 60% is our PV ratio. Next bit is asking you to calculate the margin of safety. For margin of safety, formula is profit by PV ratio. Profit is 2 lakh and PV ratio just now we find 60%. So 2 lakh by 60%, answer is 3,33,333.33 something. So 3,33,333, this is the margin of safety. So students, in this video I completed 4 problems. In my coming videos I will explain you some more problems which are very important from your examination point of view. So stay connected with us, and if you like the video then give a like, and if you not subscribe my channel now, subscribe my channel so that all the notifications related to my future videos will come to you directly. And share this video with all your friends and in your WhatsApp group so that you and your friends both will be benefited from our lectures. And in my YouTube channel, income tax lectures related to basic concepts of income tax and like previous year, assessment year, SSE, person, income, classification of income, are available. So watch the videos, share the videos with all your friends, and very soon I am going to upload some more videos related to the subject statistics 2, business statistics 2 and income tax, because I am getting some requests from the subscribers. They need the explanation on the subject business statistics 2 and income tax. So very soon I am going to upload more videos related to the subject business statistics 2 and income tax. So till then, stay connected. Thanks for watching the video and all the best for your upcoming examination.